about. Let's bring in Chris Conway from Australian Stock Report, joins us now from our Melbourne studio. Chris, great to have you on board. I'm interested in what we're seeing on markets at the moment. Lots of concerns around politics in the US, what it means for the Fed, what it means, of course, for potential fiscal stimulus. Well, not much of a continuation on the sell-off overnight. Are we again seeing that buying the dip mentality?
Good morning. Good morning, James. Look, that really is the million-dollar question. I think a lot of trading desks, a lot of investment committees, certainly those within our company, Australian Stock Report, have been asking that exact question. You know, is this the start of something bigger, or is it just another opportunity to buy a dip? You know, every dip that we've seen, certainly in recent months, has been met as a buying opportunity. So there's that side of the equation, but you know, I think it's a little bit of feel versus evidence at the moment. I think this dip feels maybe a little bit different, and that's because of the political risk and, you know, impeachment, you know, something that is rare throughout history, and, you know, just the severity of the impact that an event like that could have. You know, that's difficult to quantify. And the other thing is, you know, aside from the banks over the last 2 weeks, you know, the Aussie market has run up pretty strongly, and on next to nothing. So it seems like maybe some of those gains have been a little bit ill-gotten, and, you know, everyone's been asking the question, should we be trading up here? So this one feels a little bit different. But then again, you look at the evidence and you make the point very rightly. You know, every time there has been a dip recently, it has been bid up, and the probabilities of impeachment, I'm not a US constitutional law expert by any means, but the probability suggests that he won't be impeached, or it's a very tough road to impeachment. So maybe a bit of a storm in a teacup again.
Yeah, I tend to agree. Seems a long way off, particularly considering his own party, the Republicans, control both houses as well as the White House. I just want to get viewers across some of the early moves on our market at the moment, just waiting for the 200 itself to tick over, but seeing some early positive moves there. Very slight, though, it has to be said, up 1.5 points. In terms of some of the early movers, BHP Billiton at the moment up 0.6%, Beach Energy up 0.4% at the moment. As you rightly mentioned, Chris, so much focus on the banks at the moment. ANZ, the first of the big four to come online. A little bit of weakness at the moment, down around about 0.4%, seeing Blackmores as well come online, up about 0.5%. In terms of then what you're hearing from clients, the people you speak to, the people that I've been hearing from have a lot of money, have a lot of cash, are waiting for an extended pullback. I mean, they were speaking to them yesterday, a lot of them were happy to see that kind of a pullback, wanted to see more, but it doesn't look like we're going to necessarily get that.
Today, James, I think today, you know, we sort of just hold steady, and, you know, there's a few big macro events next week. Obviously, the meeting in Vienna regarding OPEC and what happens with oil prices. And the big one is whether James Comey testifies. He has been invited to testify, but there's no word yet as to whether he will or won't, or no official word. But I would think that's a very important event on the horizon in terms of the political risks and of course, the impact it's likely to have on markets. So I think we're just treading water at the moment. Like you, I've heard many clients say, you know, I like this pullback. There's some stocks that I've been wanting to buy are now cheaper, and I may get an opportunity to do so, but I don't think we're quite at the point yet where it becomes automatic. I think a test down towards 5,600, of course that being the level that we struggled to get above for quite some time before we pushed up towards 6,000. If we get back down there and we hold and the bulls show that they're willing to defend it, I think that's the point where you'll see a lot of people more confident in buying this dip.
And getting down there, you'd expect to see further weakness in the likes of the banks and the miners, the heavyweight players?
Yeah, I would certainly think so. I mean, it's the banks and the miners that really got us up to towards 6,000. I think 59.60 was the high. So, you know, it makes logical sense that they would be the sectors that would drag us back down towards 5,600 should we end up getting there.
Thoughts on the banks? Just watching CBA come online, pretty flat at the moment, $80.82. I was noting with some interest, speaking to James Garish over at Shaw & Partners yesterday, they were snapping up CBA when it briefly went below $80 yesterday. I mean, are you looking at potential levels? Is there value emerging in the big four?
Yeah, look, I like CBA at 80 just because it's a nice big round number, and, you know, obviously markets pay attention to nice big round numbers. Look, I think, I mean, it depends on your time frame. If you're looking at it as a trade, then very likely we could get a bounce over the next couple of sessions, albeit not a very big one, I would have thought. But, you know, again, I was having this conversation with one of the boys in the team yesterday, probably another 5%, and banks almost become automatic. I hate saying that word, but you know, you're looking at them very, very closely because they have already fallen, you know, circa 10%, another 5%. We all know there's a floor there because of the dividends that they pay, and let's assume that the dividends won't change. I know that's an ongoing argument, especially now that they have to raise even more capital. But let's assume that that doesn't change. There is a point in there somewhere, and at sort of 15%, I think people are looking at it going, well, I can't pass this opportunity up.
How about the miners? We'll talk about the big heavyweights that are going to push the index one way or the other. They seem to have, well, they held out pretty well yesterday amongst the big sell-off, the miners.
Yeah, look, I mean, commodities have sort of just stalled for the moment. Again, the oil scenario, it's hanging around $50. As you said in the lead up, its highest price we've seen in 3 weeks was only up 0.6% overnight, so it wasn't a huge move. All eyes on Vienna next week. Yeah. And it seems after getting crushed, the iron ore price has sort of found some steadiness as well. So, yeah, look, I mean, obviously it's always tied to the underlying commodities, and right now they're just having a bit of a reprieve, but that's the whole China story. You know, again, some of the guys on the show this morning were talking about if China starts to weaken further, then obviously commodities take a dive and the big miners get dragged down along with it. So that's the focus there. Been a bit of a backstory though, James. You know, not too many people have been talking about it. Everyone's concerned with Trump, and probably rightly so.
What are you liking at the moment? Is there anything that you are buying that you're recommending for clients at the moment?
Yeah, absolutely. So we like Elders. They had some pretty good numbers come out a couple of days ago. They upgraded their FY17 guidance, and on how they've been performing, we think the guidance is a little bit conservative. They're looking for growth between 5 and 10% organically out to 2020, and with some acquisitions as well, sorry, I should say. And even if they meet the bottom end of that guidance, you know, that they should be ahead of expectations. So, you know, it has broken higher. It broke out technically, but we think there's some good momentum there, and we think the underlying fundamentals support it as well. Conversely, one that we don't like at the moment, I don't know how it's opened up this morning, obviously, because I've been talking to you, but Brambles, you know, copped those 2 whacks in January and February this year, one on a downgrade and then on the numbers itself. We think their fourth quarter, or the consensus estimates for their fourth quarter are too high. Considering how they've been tracking, it's about 10% revenue growth for the fourth quarter. They've only been running at 5%, so they've got to pedal really hard just to make up that number. We don't think they will. And the other thing is, again, just technically, you know, that gap on the chart from when they gapped down in February has been closed, and it looks as though the stock's starting to roll over again once more. So a few things lining up there as to why we don't like Brambles. So they're the 2 trades that we're looking at the moment, James.
Yeah, looking at Brambles, a little bit of weakness at the moment, down about 0.3%. Just on Elders, how important is timing? I know it's always important in the market, but with a stock like Elders, and particularly considering the sort of cyclical nature, if you like, of its earnings.
Yeah, look, a really good question. I actually had a look back to their chart back to 2013. That's when they carved out all the parts of their business. I think there was some automotive stuff in there and some other stuff they really weren't proficient at. They sold those units off, and they became a pure agribusiness play once again. And since they did that in 2013, since about mid-2013, the stock price has gone from 60 cents up to 4.70. I think it closed yesterday. So, look, they have run pretty hard, but again, they're coming out and saying that they think they can grow organically and through acquisition by 5 to 10% out to 2020. So they seem to have a pathway. Again, you know, it depends on whether or not they meet those expectations, but they seem to have a pathway to continue that growth. So, yeah, understand the cyclical nature, but if they can hit what they've set out to achieve, then it should, you know, hopefully continue higher.
Chris Conway, appreciate your time this morning. Thank you.
Thanks, James.
Chris Conway, the Australian Stock Report.